Hey guys, what's going on? Welcome back to episode 4 of the Robinhood Challenge. This is week 4's recap, and yes, this is our first losing week. Now, in the beginning of the week, we had all-time highs in this account. I did make a big mistake going for kind of a YOLO play, a very risky play that I definitely regret. So I'm going to be going through my thought process behind that and how we can learn from this mistake together. But I'm going to be taking you guys through day-by-day basis, what moves I made, and then once again, I'm going to be going through the mistake and the lesson that I learned from this, just not to get greedy. So, without further ado, let's get into the recap for week 4 of the Robinhood Challenge. Now, once again, this challenge, we're trying to get from $5,000 that we started with all the way up to $25,000 by the end of 2020. And we're on the way there. We hit $10,000 plus this week, but then we dropped down. So I'll be going through the process behind all my trades this week and the mistake that I made once again. All right. So first off, on Monday, we're sitting around $9,000 in this account. So my first move is, you guys know that I'm super bullish on Evofem Biosciences, ticker symbol EVFM. This was one of my top stocks for this week and the next week up ahead. On September 8th, they have their Phexi product coming out. This is the huge launch of Phexi. And I have a personal price target of around $4 to $5. That's what I'm looking for in this stock. And in the past, it hit $8.50 when they first announced Phexi. So I'm looking, once again, $4 to $5. I'll be very pleased with those gains. So I bought 500 shares on Monday morning. It was around $3.21 at that range. And I spent $1,600 or so on this position. So I started off the week very strong. I was pleased to get it under $3.30. And I do think this position was a very strong position, but I made a very big mistake with this position, which we'll be going through later in this video. So next up, I think this was Tuesday or Wednesday, we saw LCA. You guys know this is one of my favorite stocks. We saw this take a fat dip. This was down about 1.37%. It had been trending down the past couple days. It was sitting at like $15.08, I believe. And I think that's an absolute steal, as I'm looking for $20 plus when the merger happens within the next 2 months or so. So I'm very bullish on LCA. As you guys know, I've said that this is my top position for a while now. So I added some call options in this stock, expiring September 18th for a strike price of $17.50. So the thesis behind this trade is I believe that it is very oversold. Now personally, I don't think it gets to $17.50 plus by September 18th unless we get big merger news, which may or may not happen. But this thesis behind this one was a quick trade, very oversold. The hype is going to get real for LCA. So I bought 10 call options. I have a strike price for $17.50, expiring on the 18th. I did the strike price because I could control more shares with 10 contracts. I was controlling 1,000 shares of LCA, as I was expecting a pretty quick bounce back on this position. And the out of the money strike price, $17.50, and the September 18th expiry. This was the quickest expiry I could get. And once again, the thesis on this trade was the fact that I expected a quick bounce back from LCA. So I did the quick expiry and out of the money strike so I can control more shares for cheaper. And with a small account like this, you can't just go far in the money. You got to maximize your upside by going far out of the money and quicker expiry. Now it is a lot more risky, of course, but unless you're just trying to preserve your capital, you have to take some risks sometimes to make more money in an account like this and grow your account by 100% plus. So I ended up buying those call options, and I also bought 100 shares of LCA, as I thought this was an absolute steal at this price, the low 15s. I was personally looking for any price under $15.50, as I saw this sitting at $15.08. Of course, I'm going to buy a lot of shares. So I bought 100 more shares, and I bought those call options because LCA I'm super bullish on, and I saw a steal of a deal, so I capitalized on that. So guys, I was up pretty big on my call options, pretty big on my LCA shares, and up a solid amount on my EVFM shares. My max account value that hit for this week was $10,708, as I was sitting at $9,000 on Monday morning. So I had made $1,700 in profit by Wednesday afternoon, but this is where things got bad and where my mistake was made. So I saw Tesla start dipping on Tuesday, and on Wednesday it took another big fat dip. So my thesis behind this was, okay, Tesla is one of the most beloved stocks, one of the most hyped stocks. We got Battery Day coming up. Premium should be out of the world on Battery Day. So my thesis behind this trade is September 22nd is Battery Day. Premiums are going to be crazy high on September 22nd before Battery Day because the implied volatility is going to be so big. The theta is going to be out of this world. So my thought behind this was, okay, even if Tesla keeps dropping a little bit in the short term, we should be able to get a huge premium right before Battery Day and possibly 100 to 200% plus this option. So here's where I made this mistake. I thought in my mind, okay, Tesla is not going to fail. Tesla is not going to keep dropping. The overall market is still very green. I do expect Tesla to make a quick bounce back within the next 1 to 2 days and then run up all the way to Battery Day. So that was my thesis behind this trade. So what happened? What I had to do, these options for Tesla are very, very expensive, of course, because the implied volatility is so high. And It is one of the most in-demand call options there are in the market. So what I had to do here was I had to sell off all of my shares in LCA, had to sell off all my shares in EVFM, and all of my call options on LCA as well. So the only thing that I was holding was my Beacon Roofing call options, which I'm still holding as of now. So this is a huge mistake looking back on it. I got greedy. I thought I could get some crazy gains with Tesla, which of course was not accurate. So I sold all of my positions besides Beacon Roofing, resulting in me buying a call option for Tesla for slightly out of the money, which is $470. Strike price expiring on the 25th. So I can sell right before battery day and reap the benefits of the high volatility expected right before battery day. So that was my thesis behind that trade. I got very greedy. I sold my positions thinking I could get a double up or a triple up on this Tesla call. And as we know what happened on Thursday, Tesla took a fat dump. On Friday, we had a slight bounce back, but after hours, it was down after the S&P inclusion. So what I was thinking with this trade, there's a bunch of catalysts coming up. I thought that we're going to get the S&P inclusion this week. I also thought we'd get a quick bounce as Tesla started selling off. I did not expect it to keep going down because the market is just so green. There's so much hype behind it to stock like this. I expect people to start buying the dip, which did not happen. My thesis was wrong there. But I will be holding this Tesla call option through next week unless Tesla takes a big jump. Then I'll probably take profits really quick or cut losses really quick if Tesla is pretty green next week. If not, I'll probably end up holding on and then selling on battery day right before battery day, just reaping some of those losses back because, like I was saying, the implied volatility should be a crazy amount of volatility right there. So looking back on it, I was super greedy when I sold my positions. I have a very strong thesis behind LCA. That is my biggest position in my main account and my strongest thesis behind everything. I see Tillman Fertitta on both sides of the deal. The merger is 100% happening in my opinion. It's just a matter of when and not if. And once the market realizes this, it's going to run up massively, like we actually saw the day after I sold these call options into shares. So that was a huge mistake on my part, guys. Also, EVFM, very strong thesis behind this. We have a date of September 8th, which I'm expecting some crazy stuff to happen with the stock, running up to $4 to $5-ish. That's my thesis behind this trade. So I got greedy. I sold all that thinking that I could get some quick money with Tesla. And what happened? I lost over $1,000 and possibly more going into next week. So huge mistake there. I'm gonna have to learn from this mistake. Even though this is a smaller account and I'm trying to grow quickly, we do have to risk manage, and buying that Tesla call option was not risk managing. That was me being overly aggressive, overly greedy. I do have to realize that Tesla is heavily overvalued here, but I was just playing the hype leading to battery day, playing the catalysts of the S&P inclusion. So I made the mistake. I have nothing against Tesla. Tesla is one of my biggest positions in my main account as of right now, as I was buying the huge dip on Thursday and Friday. So I've been buying a lot of Tesla lately because I am super bullish on the battery day coming up. I think it's going to run up possibly to new highs. Now obviously it's not looking like that right now, but as we know, Tesla is the quickest to drop on a market correction / crash and the quickest to bounce back. So we saw this same thing in March as it dropped down to $350. After the crash happened, we saw this run up crazy amount, over $1,000 super quickly, and made it up to around $1,800 per share. So I saw the same thing happening here. I knew that Tesla was very high valued, but the thing is, just the most hype stock in the market. So I saw that quick drop, got greedy, bought in, was looking for a quick bounce or a big run up to battery day, and I should not have done that in hindsight. I should have trusted my strong thesis behind each of LCA and EVFM and not been greedy behind this. So I'm still holding my Beacon Roofing position and my Tesla call option. I held it all the way through Thursday and Friday. I'm not going to panic sell because I don't believe this is an actual crash. As you can check on the main channel, I'm releasing a video going through what I think happened for this dip on Thursday and Friday and just how I think the market was manipulated. So if you're interested in that, I'll link that one above. But yeah, in hindsight, looking back, this was a very important lesson to learn as I lost over $1,000 making this trade and more from the opportunity cost, as I would have gained a lot more from LCA and EVFM, and I lost money from Tesla. So opportunity cost, greed got me there. And I'm still sitting over $2,000 in gain in this account, but I wiped out a ton of gains this week from my greed happening and my selling of my position that I had strong thesis behind for just a risky position in Tesla, thinking I could get some quick high play, quick premium appreciation, which did not happen obviously, and now I'm down. So we'll see what happens next week. If Tesla starts running up, if Tesla starts bouncing back, I will take profits because with this account, I'm trying to grow quickly. I'm not trying to hold on to an option for a long time. But if Tesla's in the red, I'll hold on till battery day and just reap some of the losses back at the least and get that premium going to battery day, which I believe is guaranteed. It's not guaranteed share appreciation, of course. It's not guaranteed that no bad news is going to come out in Tesla. What I am playing is a huge volatility and this huge dip, and I think it should bounce back from the hype I'm not saying this company is fairly valued because I do believe it is overvalued, but with plays like this, you gotta look at what the market is looking at it like, and Tesla's like the most hyped stock in the market. It has some huge catalysts coming up. So for that reason about the Tesla call option, once again, a big mistake we can learn from. You guys can learn from my greed. Don't make this mistake yourself. Don't sell off positions that you're super confident in just to make a risky position where you may double it or you may half your money. It's just not worth it in hindsight. We gotta play safe, we gotta take profits and not be greedy. Alright guys, thanks so much for watching. We're going to update you guys next week on how this account is doing. I may have an update out midweek if I can get one out. I am super busy with college and everything, but I'll grind one out for you guys hopefully midweek, and if not, I'll for sure have one out next Saturday. Thank you guys so much for the support, guys. Leave me a comment below your thoughts. Subscribe if you haven't already. And yeah, guys, let's get rich.